Welcome to Mrs. Moneybags Live. This episode is brought to you by quickequity.ca, helping you to get to your money fast by providing mortgage solutions to clients all across Canada. I am your host, Nicole Williams, aka Mrs. Moneybags, Mortgage Level 2. We go live Monday to Friday, keeping you posted on all the current market news, real estate news, and mortgage news. Remember to do your own research. This show is intended for information purposes only. Now let's get right into it. I hope you guys had a wonderful evening. Let's get into today's mortgage industry headlines. So here is your summary of mortgage and housing news from across Canada for Tuesday, February the 6th, 2024. So we're going to go through and discuss a few articles that I thought were interesting. So I know we were talking about interest rates. Is the Bank of Canada going to cut rates? What is the Bank of Canada going to do? The last interest rate decision we had an interest rate hold. Now let's take a listen to this article. So market participants still expect the first Bank of Canada rate cut in April. Despite pushback from the Bank of Canada against aggressive rate cut predictions, a majority of influential economists and analysts still expect rates to start falling by April. That's according to the Bank of Canada's latest quarterly market participant survey, which consists of a questionnaire sent to 30 influential financial market participants. Based on the median survey results, the participants expect the Bank of Canada to cut its policy rate by 25 basis points starting in April, followed by another 75 points by December. That would bring the Bank of Canada's overnight target rate down to 4% from its current level of 5%. The survey respondents also see the bank continuing to cut rates by another full percentage point in 2025, bringing its overnight rate to 3%. These forecasts are unchanged from the bank's third quarter survey results. The latest results are based on questionnaire responses that were completed by key market participants between December 18th and 19th. The same week, McCallum said it was too soon to talk about monetary policy easing. I know it is tempting to rush ahead into that discussion, he said at the time, but it's still too early to consider cutting our policy rate. More recently, he told the House of Commons Finance Committee last week that even though monetary policy deliberations have shifted from whether monetary policy is restrictive enough to how long to maintain the current restrictive stance, the bank remains hesitant to start cutting rates permanently. We've made a lot of progress on getting inflation down, and we need to finish the job, he said. Stronger than expected GDP growth in November and forecasts for sustained growth in December have also eased pressure on the Bank of Canada to start cutting rates in the near term, allowing it to focus on ensuring inflation continues treading back towards the bank's 2% target. What are your thoughts on that? So I know we've been saying for a little bit that a lot of the economists are considering that 2024 is the year that we will start to see the rates come down. Are you in agreement that you think that rates will start to come down as early as April, and that by the end of the year, we will see a full 1% cut on the Bank of Canada's overnight rate? What are your thoughts on that? Drop them in the comments below. I do believe it's time. The economy, the people, we all could benefit from the interest rate cuts. And I do believe, my own opinion, and based on some of the facts that I'm seeing, inflation is starting to get into line as to hitting the targets. I believe we will hit the targets very shortly, and I'm hoping sooner than later so that interest rates can continue to level off. What are your thoughts? Drop them in the comments below. Let's get into this next article. So I know there's been recent talk about foreign home buyers and international students and all things such as. But basically the government has put an extension on the foreign buyer ban. So let's get into an article that will expound on this. Okay. So the extension of the foreign buyer ban won't solve affordability woes, economists say. Ottawa's decision to extend a ban on foreign home buyers for an additional 2 years is a reasonable move, but will not go far enough to address the country's housing affordability crisis because such buyers are not a major factor to begin with, a leading bank economist says. The plan to extend the ban, which came into effect on January 1st, 2023, and was set to expire on January 1st, 2025, was announced on Sunday by Deputy Prime Minister Christophe Freeland, and the ban will now expire January 1st, 2027. CIBC World Markets Inc. Deputy Chief Economist Benjamin Tal said that while the ban is a reasonable policy and a step in the right direction, he does not consider it a major macroeconomic move. I am not surprised whatsoever that they extended it, Tal said, nothing that foreign buyers are noting that foreign buyers are an easy target for a government eager to show it is taking action on housing. Mortgage strategist Robert McLister said the foreign buyer ban is like a magician's handkerchief that diverts attention from the actual problem of too many incoming immigrants relative to the number of homes built. McLister, who writes a column for the Financial Post, said that a large share of foreign buyers purchase high end properties, and banning those individuals can result in lost tax opportunities and can dampen the wealth of more affluent Canadians who benefit from the price gains at the higher end of the real estate spectrum. Under the ban, foreign commercial enterprises and people who are not Canadian citizens or permanent residents are prohibited from purchasing residential property in Canada either directly or indirectly. For years, foreign money has been coming into Canada to buy up residential real estate, increasing housing affordability concerns in cities across the country, and particularly in major urban cities. Freeland said in a press release announcing the extension. By extending the foreign buyer ban, we will ensure houses are used as homes for Canadian families to live in and do not become a speculative financial asset class. Vancouver had the largest portion of non-resident ownership in urban Canada at 4.3% in 2021. According to the latest available data from Statistics Canada, Charlottetown had the second highest at 3.5%, while Toronto sat at 2.6%. The ban on foreign buyers carries the potential for fines of $10,000 for violations. Legal battle over real estate commissions goes national. 10 mortgage trends, officially known as the Prohibition on the Purchase of Residential Property by Non-Canadians Act. The ban was meant to take some pressure off home prices amid an affordability crisis only made worse by the raising costs of living brought on by inflation and elevated interest rates. Housing prices have soared over the past decade, pushing the cost of home ownership out of reach for many people. So, what are your thoughts on this? I too agree with the economist that having the foreign buyer banned, it really is like a hocus pocus trick in the sense of we're seeing here that Vancouver, which has the largest proportion of non-resident ownership in urban Canada, only sits at 4.3%. So only 4.3% of all of the homes that are owned in Vancouver, which is the largest percentage in Canada, is only representing 4.3%. So it's not as though they're taking away 50% ownership or a 60% or even a 40 or a 30 or even a 10% ownership cap. It's only 4.3%. And, the economist from CIBC is, I believe, also correct in the fact that this is a missed opportunity for municipalities and regions and the government to, receive the tax money that they would have received from foreign buyers. So there's a missed opportunity when it comes to the provinces and the country making an income. What are your thoughts on the extension of the foreign buyer ban in Canada? What are your thoughts? Drop them in the comments below. Let's get into the third article. So, Greater Toronto home sales surged 37% in January, but market is tightening. This is according to TRREB. Greater Toronto home sales soared 37% last month compared with the same month a year ago, as lower borrowing costs associated with fixed rate mortgages lured some buyers back to the market. The Toronto Regional Real Estate Board says last month's 4,223 home sales also marked a 22.9% month over month increase from December. The board says the market is tighter than it was a year ago, as new listings increased by 6.1%, but didn't keep pace with demand. Sales were up across all housing categories in the region on an annual basis, led by townhomes at 54.5% and semi detached homes at 42.9%. Meanwhile, the average home price dropped 1% from the same time last year to $1,026,703, which was also about a 5.4% drop from the final month of 2023. TRREB President Jennifer Pearce said that if inflation cools off this year, as the Bank of Canada has forecasted, the resulting lower interest rate should prompt more buyers to re enter the market, including those currently facing high rents looking for their first home. What are your thoughts on this? The fact that January we actually saw an increase in home sales. I think that's a positive thing. I think that's a wonderful thing. We are still down year over year, but it's an increase over December sales. So again, the Toronto Regional Real Estate Board says last month's 4,223 home sales also marked a 22.9% month over month increase from December. That's amazing, in my opinion. What are your thoughts? Drop your comments below. Okay, so now let's get into the financial tip of the day. The financial tip of the day is to pull and review your credit. Every quarter, at minimum, you should be reviewing your credit to ensure there are no discrepancies. Everything that is supposed to be there is reporting, is accurate, and is reflective of where you need to be, understanding your score, understanding the comments, and then reviewing with both TransUnion and Equifax, which are the two companies that we have here in Canada, to ensure that everything is reflective as it should and presenting you in a correct light. That if you are to either enter the real estate market or looking for a loan or financing of any sort, you know that there are no issues or there shouldn't be any issues when it comes to your overall credit. Again, today's financial tip of the day is to pull and thoroughly review your credit. So um, now let's get into the Mrs. Moneybags money affirmation of the day. Abundance is my birthright, and I claim it right now. Abundance is my birthright, and I claim it right now. Abundance is my birthright, and I claim it right now. Let's say that together 3 times. Abundance is my birthright, and I claim it right now. Abundance is my birthright, and I claim it right now. Abundance is my birthright, and I claim it right now. Well, that's all the time we have for today. Thank you for tuning in to Mrs. Moneybags Live, and we'll see you again tomorrow.